Hello and welcome to another update video about Doge. Here on the Doge chart, we are still dancing around this support area. And yeah, I mean, it is a chart that also has shown some upside momentum today. The Sunday low is still holding, right? This is interesting, where the price bottomed pretty much locally in the middle of our support zone here between the 50% retracement level and the 61.8 retracement. So between 23.5 cents and 24.4 cents until the price, however, really breaks out to the upside. And I'm talking about a real breakout above the 29.3 cent level. The risk is just high that there will be another low that could be either just testing the 22 cent level, and that would maintain a directly bullish outlook, because it would just mean that the wave 2, which is a corrective pullback, basically it's correcting the move to the upside, which happened between the 3rd of February and the 4th of February. So that all happened within a day, right? So this correction could still be extending. It wouldn't be a problem, but the 22 cent level is key support here. Any break below 22 cents will mean that a larger correction is unfolding, then probably one more marginally lower low in a wave 4. We have to consider this. I'll label it as alternative wave 4. I don't have a really clear pathway for it. I mean, the move down would be a diagonal, so it would be something like this here to be an A wave down, B wave up, C wave down. I think we could spend some time in this range. Really, the problem is also that the rally from the recent low here from Sunday is only a corrective move up. And as you can see, it's clearly 3 waves, and then we had this pullback, and this is also not very convincing yet. I mean, what we need to see as a minimum for a first indication that a low is in place is a break above the green line here. That's the B wave high of this correction, and it's at 27.7 cents. Better will be a move above the February high. The problem is, I mean, if we talk about short-term bearishness, let's label it like that. Let's say, okay, alternatively, there could be a wave 4 that might still be unfolding, right? And okay, let's go to the 1 hour chart, zoom out a bit. So, I mean, this would be an ABC overall, but in this C wave down, which would have started up here around the 17th of January, from this top, we could then say, I just want to show you how the micro patterns would unfold. Wave 1, wave 2, and then this here would also be ABC and wave 3. This would be wave 4 and wave 5. So this would be in the white count, yeah, the pathway for one more low. Overall, obviously, it would be integrated in an ABC structure. A wave, B wave, C wave. So again, I cannot rule that out. The thing is, though, you might say, okay, then a move above the February high, which I just mentioned, would invalidate that. So that would be, that's why I find that an important level that needs to be broken. The problem is, it could just be a larger fall, right? So again, it will take a while until we can really confirm we're bullish here. But for now, we could say that any break above the February high will at least give us a solid confirmation. But we still have to keep in mind, it could still be just a 3-wave move up, right? In a wave 2. For example, it might easily be A wave, B wave, C wave. Do you see what I mean? And then it comes down. It would even look better that way. So we'll see what the market does. I mean, overall, the parameters are very clear. And the main problem comes from the situation that the bounce from the February low was only a 3-wave move up. It was not a clear 5-wave move. Therefore, it can always just be a corrective rally. It can always just be a corrective bounce. Therefore, we have to just pay attention to the levels, and we will always add the support levels to the chart that are relevant. At the moment, it's this area here. And when the market is in such a support area, it typically can present an opportunity, like a solid reward to risk profile, right? For example, for a long trade, now we've already left the area now to the upside. So we'll see if the market can break above these next resistances. And then once we have this wave 3 complete, we can add support for wave 4. But it's too early for that. We'll see how the market looks tomorrow. For now, I think it's just important to understand 22 cents is support. And it could easily form one more low. But below 22 cents in the white count, one more low on the larger scale is relevant. Then ideally, then ideally it's only going to form a marginally lower low. But that should then be the last one, because if it's not, then the larger time frame chart needs to be revised. So we're a little bit in this in-between space, a little bit in no man's land at the moment, but that's everywhere, the case. Overall, it should be quite clear I'm leaning higher, either in the yellow or the white count. They are both bullish. It's just that in the white count, one more low has to be considered. You should mentally prepare for it before an upside reversal. That's the update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.